All right. Good morning. Well, for me, it's good morning, good afternoon, or evening, whatever time zone you're in. Happy Hump Day. We're going to do some live trading today. We do it every Wednesday on our Invest with Jacob channel on YouTube. I also have a live trading group that does it every single day, just not in YouTube, where I give out all my trades. You can see and use the indicator, all that kind of good stuff. If you're new here, welcome. We are today going to live trade our indicator. So it's IWJ Pivot Point Pro. You can see as the first indicator on my chart here. If I click the eyeball, you'll see the sells and buys go away. And essentially what it's looking to do is catch the reversals in the market off of key levels. And the difference between, say, my indicator and others is that mine is a forward-looking indicator. What I mean by that is most indicators will come up here. You've got a big move up, and then they're going to fire somewhere down here after this move or something like that because they're looking for moving averages to cross. They're looking for the MACD to cross, the RSI to get overbought or oversold and then turn down. They're looking for volume to catch up, some sort of metric that lags the market. So the market's moving, and as it starts to move down, you can't have things change until the market starts to move up or down. So if the market's moving down and you want the indicators to change in a positive fashion, they can't. The lagging indicators can't do that until you get some positive action, because there has to be positive action to create positive influence on a lagging indicator. Same thing goes for selling. If they're coming up, you need some negative bars in order to get a lagging indicator to fire, because it's got to catch up. We do the opposite. We, as you can see on the screen, and this is pre-market, we don't trade this, so I don't want you to look at this and be like, oh, and honestly, it's not that bad, but there's low volume in the pre-market, but it still kind of recognizes the levels. But we don't trade pre and post market. That's not great trading atmosphere. It's low volume, choppy trading. It's not a great place to be. We, though, are looking for the exact tops and bottoms relative to what the market is doing. I don't mean like the all-time highs and the all-time lows. I mean when the market is moving up, we're looking for the reversal point. And right here, it pretty much nailed it. We got this move down that it fired on. It gave a little spike up, and then it's moved down. Got a false buy here, and then this buy caught the bottom, caught the exact low. Again, we don't trade this because of the choppiness. But the point I'm making is how our indicator works. We fire at the top and we fire at the bottom, whereas most indicators fire in the middle or worse. And if you fire here, you miss the move or miss a good portion of the move on the way down. So it's a forward-looking indicator that is also price action. So a lot of indicators are just based on other indicators, quite frankly. They're based on what the MACD is doing or what this is doing. Ours is based on the things that truly move the market. High volume levels, key levels that are very likely to produce rejections, the options, 0 DTE market, which really dictate the day for key levels. It's looking for real-time momentum loss. It's looking for shift in money flow. It's looking for the ADD to have had a sustained change. A lot of times you'll see the market moving up, but the ADD is moving down. And then when the other conditions hit, that's when you get the sell signal, because the ADD is indicating the market is weak on this move up, but you still, if you got in right when the ADD was sinking, you would have lost money. So the timing is everything, and that's what the indicator really does well. It essentially puts together all of those elements, and it comes up with what we created as a buy and sell cycle. And what that means is when you get a buy signal, or let's just do a sell because that's what's easy on the chart here. So you're in a buy cycle right here. They bought the market up. Okay, and we're going to skip this one because it's just going to be confusing if I don't. We're in a buy cycle all the way up here. Okay. When we get this sell signal, we are still in a buying cycle, meaning that the market is still showing signs of a buying cycle. However, we have enough points of data here that to see that the buying cycle is weakening, and we would expect at least a small rejection here. And the whole point of the indicator on day trading anyway, not on swing trading, but for day trading, is to capture roughly 7 to 10 ES or futures points. Okay, so the futures over here, the ES, that's at 68.93 right now. You're looking for 7 to 10 of those, which translates to roughly 70 cents to $1 on the SPY for the initial move. That's where we're going to take our first profit, is at 20%, which is it's going to be about 7 to 10 points on the ES. So as it moves down, we make our 20% profit, we sell half of our position. And then we let our runners run. They keep moving down, we move our stops down, they keep moving down, we take a profit, they keep moving down, we take a profit, and so on until we get stopped out. Okay? So we take our initial position at 20%, and then we never let this trade go bad. Once we hit that 20% mark, the worst we can do on any trade is a 10% gain, because the second half of our trade is set to break even. So you have a 20% and a 0%, that you divide them by 2, you get 10% gain. So once we hit our first profit target, we have a winning trade no matter what. But my point here is we're in a buy cycle. The buy cycle is weakening as we come down, and eventually it's going to convert into a sell cycle. If it does not convert into a sell cycle, you get a sell stop, which you can see over here on the left. This sell started down, it looked for weakening in the buy cycle, then they closed the SPY market for the night, they reopened it, and you got a sell stop up here. So you have a sell stop, which means you're still in the buy cycle. Okay, so we're looking in a buy cycle, we get a sell that's still in the buy cycle unless the sell goes far enough to reverse it into a sell cycle. And then once it does go far enough to get us into a selling cycle, you get a buy signal on weakness in the sell cycle. So this buy signal down here, this one fails, so you get a long stop. This one down here is a sell cycle, but it sees weakness in the market, so you get a buy. And then as it moves up, it moves into a buying cycle, finishes the buy cycle, and you move into a sell, and it starts to move down again. So once it creates the cycle, then it creates then it looks for the weakness in the cycle, and once all the metrics are met, it issues a buy or sell alert. Unless we did not get far enough in the prior cycle, then you get a sell stop or a long stop or buy stop, whatever you want to call it, call stop. So that's how the indicator works, and that's why you see stops, and that's why sometimes you'll see, you might see the market come up, you get a sell cycle, but it doesn't work out, and then it does this, and you go, oh, hey, why didn't we get a buy right here? Because you got a buy down here, and this was all still in the buying cycle. No cycle had changed here. We just saw weakness here. They moved down a little bit, but not enough to work out, and they continued buying. So you're still in the buying cycle, so it's not going to reissue a sell when it's already told you what cycle you're in. That's like saying, that's like when, so have you ever used Amazon Alexa? Not Amazon, what am I talking about? I'm looking at my Alexa right here. Have you ever used GPS and you see a direction and it's like 10 miles, go straight, and you're already going straight? I don't need that direction. I'm already going straight. And then you get there and you're like, well, maybe there's a V or something that comes off and you really need to know it. No, it's just more road. And it just says go straight. That's the direction I don't need. And then I get to a split and there's no direction. Anyway, my point is it's not going to reissue a new direction when you're already on that direction. It's smarter than GPS. You're going to just stay in the buying cycle, and it said, hey, I told you we were in a buying cycle back here. I said it was weakening here. Or let's do it this way. I told you we were in a selling cycle here. I told you it was weakening here. Now it's gaining strength again. Hey, it weakened again here, and now you've moved into a buying cycle, and you get a sell signal. Okay? So that's how the indicator works in general. Super simple, guys. All you have to do is put it on your chart. You get a sell, you sell the market. You get a buy, you buy the market. Some people don't use options. They use the leveraged funds. They use the 5, 3, and 10x leveraged funds. That's all up to you. I don't care how you trade it. I'm just saying when you get a buy signal, you buy the market. When you get a sell signal, you sell the market. Now, there are some rules and caveats to that. we only trade the first half of the day. So now that I'm on the East Coast, we only trade till 1 p.m. So right here's our line, and I'll just put a vertical line in there so we have it. We only trade till 1 p.m. no matter what, because the market does all of its moving in the morning, in the first part of the day, and then it does a lot more moving right at the close. But you don't want to trade the last 5 minutes of the market. It's really not a great way to trade. Just way too volatile there. So we only trade this part of the market from when the market opens at 9:30 all the way up until this bar here, this black line. Anything that happens after this, we do not trade. It's choppy, it's slow, and there's really no money to be made most of the time. Are there late day market moves that are huge? Of course there are. Is that the norm? No. So we trade what the normal statistics say, and our statistical evaluation shows that between 9:30 and 1 p.m., and 1's probably a little late. I should probably cut it off at noon, to be quite honest with you. Maybe I'll do that moving forward. But that's your trading window for day trading. After that, you're getting caught up in post-lunch trading where people aren't even trading anymore, or they're at lunch and the market's got low volume. Volume is the key to the market, and that's why we want to keep trading in the higher volume zones. So that's one rule. Another rule is we don't trade against the trend on trend days. Now, how do you know it's a trend day? So you have a pre-market high right here at 685.88. You have a pre-market low here at 684. I don't know if they got any lower in the other market. Yeah, the actual pre-market low is going to be down here at 682.50. If they break above the pre-market high, and then they come back and test any of these three lines I have on the screen, the red one, the blue one, or the black one. The red one is the 8 moving average exponential. The blue one is the 21 exponential, and the black one is VWAP. The 8-day moving or 8-bar moving average is a momentum indicator. As long as they're above that, momentum is in the direction that they are going. If they're below it, momentum is down. If they're above it, momentum is up. The 21 is your trend holder. So when they're in an uptrend, you're going to see they come back and they generally hold the 21. They held 21 in VWAP here, kept the trend going, came back, held it again, tried to keep the trend going, and now they've failed it a little bit. So the 21 is your trend holder, and VWAP is your backstop. It is kind of where the average price comes down to when there's going to be a little bit of movement, but not a breakdown or a breakout. They come down and test it and then continue. So as long as they have to get above the pre-market high. Then they have to test one of these three lines. Then they have to come back up and make a new high. If they make a new high over this high right here, we now have a trend day up, and we ignore all sell signals for the rest of the day. Can they do this? Yes. Do they? Not very often. Not very often at all. But they do. Yesterday was one of those days, actually. I'll show it to you in just a minute. Same thing to the downside. They have to break the pre-market low. Now, you got to be careful with the tool I use. The pre-market low only, key levels tool only grabs the pre-market low from the yellow. So the actual pre-market low is down here. Right here. So if they break the pre-market low, they come back up, test any of these three lines, wherever they're at, they'll be down lower at that time, and then break the low that they made. So if they break this low, that's a trend day down, and we don't trade any buy signals on that day. So that's another rule we use. The final rule is 3 strikes and you're out. There are days that the market's going to do this, and you can't do anything about it. So it's going to do like this, and you're not going to make any money. And if we have 3 trades that fail because of this, then we're done trading for the day. Those are the risk. That's how you keep your risk and your reward in line, and keep your money safe and build a bankroll. Now, when we take profit, or when we're setting our stops, I should say, if we get in at 685 here, at 685.07, we're going to say it's 685 flat for math purposes. If we're long here, so we want the market to go up, our stop from 685 is going to be 684.50, 50 cents below wherever the SPY price is when we enter the trade. If we're looking for down, it would be 685.50, 50 cents above wherever the SPY price is when we're looking for the market to go down. As the market moves in our direction, so let's say we bought a $1 call. Okay, so we have a $1 position. if that we're looking for $1.20 for our first take, that's 20%, right? As the market moves, when we get to $1.10, we move our stop up or down depending on which way we're going by 25 cents. So if we were in a call here and our stop was 684.50, our stop would move to 684.75. So we move our stop up. We don't take profit yet, but we cut our losses short, so we don't sustain bigger losses than we need to. Many times when the market moves up this far and then comes back and fails to the downside, it's not coming back up, at least not until it makes a better low. So we don't want to sustain that full loss if we don't have to. When we get to 15%, so our options price now goes to 115, we move our stop to break even. So now we have our stop set at $1. Okay? Not break even on the chart, not 685 flat, break even on your options price. So when we get to 10%, we move it up or down 25 cents on the price. When we get to 15%, we set our stops to break even, and then we take profit at $1.20. That's half. We cut half of our trade at $1.20. We make 20% on our money there. Then we let the runners run into key positions. So let's say we were up 20% right here. I would very likely let my position try to run out to the pre-market high at that point. There's a little bit of resistance right here, but the next major zone is going to be the pre-market high. And if we were moving up, I would probably try to hit that pre-market high area as my target for my next profit take. And then we always move our stops up as we do that. When I get into the money, now right here we only have a 20-cent stop. I maintain a 50-cent trailing stop. So my stop will be at $1 until I get to 150. Actually, 160. At 150, I have a 50-cent trailing stop now. Then I get to 160, my stop moves up to $1.10. I get to 170, my stop moves up to $1.20, and so on. Now, remember, you need to take some profit at these levels so that if it does go back and stop you out at $1.20, you still got this 70-cent gain on a little bit of your money. So what happens is I'll close another half at, say, $1.70. I'll close another half, say, at $2, and so on until I only have one small piece left, and that just runs till it gets stopped out. And I just keep moving my stops up. So that's how everything works with the indicator. Hopefully that makes sense. Prabs, welcome to the stream. Good to see you. George, welcome to the stream. Maxime, welcome to the stream. Good morning, everybody. Got about 10 minutes here. Right now, the overnight video explained all the levels, but I'll give you a quick synopsis. We are in the danger zone here for, oops, let's undo that. We are in the danger zone for the bears, 68.80 to 68.90 or so. This consolidation zone is where they're at. They've turned down off of the 68.95 area. The bears need to start pushing down pretty much immediately, or 7,000 is likely a direct shot. Bulls, they want to keep pressing. They want to get through 68 or 6,900 really is the number they really want to break through. They get through that. And 7,025 or so here is your next target. To the downside, the bears obviously need to break this low here at 68.30. And then ultimately they got to get through 67.30 in order to get the ball rolling for any kind of downside move. Now, be careful because there's a lot of volatility in the market since here. There's been a lot of chop and up and down moves. They can throw a wick up here for liquidation move and then do this, trap every buyer in, liquidate all the shorts, and make sure nobody's short on this move down. They can definitely do that. But a close today over 68.90 to 6,900 would be very strong for the bulls and likely pointing us towards 7,000. NASDAQ, same type of look. Except they're only at their 618. This is something to kind of watch for the day. ES is outperforming NASDAQ on this retrace, but NASDAQ was much further down. NASDAQ is still well within its 618, 764 zone and this resistance zone I have boxed here. They're right in the middle of that. So this is still a tough area for the NASDAQ, and until the NASDAQ breaks out, ES is probably going to be sideways to down. It can grind higher, but until you see the NASDAQ accelerate, ES will be kind of trapped as well. So we'll keep an eye on that. The first level to the downside they got to break is 25,490, then 25,000. To the upside, they got to get above this 25,920 area, and that should signify a run to 26.5 to 26.7. Eight minutes. Any questions? Anybody need to know anything about the indicator, about the counts. These levels here, these are extremely important levels. You see them in red. There's a bunch of them. There's more than that, though, if we scroll do this. So you have a 1-day minimum down here at the bottom. That should contain the market move to the downside. You have a 1-day max. That should contain the market move to the upside. Then you have these 0 DTE walls, and they're very, very strong resistance. We are at one right now. They've been grinding on it all night. You can see that they've kind of just come straight across it for the most of the night. And that is going to be the first key area. If the bulls are able to accelerate above that, the next one's going to be 687, and that's going to be our next call wall. And if they get through that, they're probably looking at this 690 zone or 689.60. And then to the downside, if they break the pre-market low to the downside, that's actually down here where this black line is, then 680 is very likely to come into play today, and potentially lower, but that's going to take some work from the bears. We'll have to see how the supporting evidence looks in the market. Right now, the Qs are leading. They're up about 0.5%. RTY is lagging, actually, so that could be something to watch as a red flag. The transports are, they don't give us a pre-market. The banks are basically flat. SMH, let's just kind of go through the semis real quick. The SMH is strongly green. NVIDIA is likely strongly green, yes. Meta is green. Microsoft green. Netflix green. Amazon green. Tesla green. Apple's red. 11 cents. Well, 39 cents now. Google is green. So we're seeing a lot of green, but we are seeing a lot of peaks. As I was looking there and turning down. So hopefully, if you're looking for short, you're wanting to see the Mag 7 start to turn down, because if they're green like they are right now, that is, excuse me, that is an issue for the bears. You're not going to turn the market down unless the Mag 7's participating. You would need extremely strong breadth to the downside. Bitcoin still fighting that 100K level. They came down to 103 and now bounced it back to 104. I suspect the bulls will hold 100K, and if they do, we're probably looking at 140 overall on Bitcoin. So that would be my upside target on the breakout if they break out. But right now, very key level at 100,000 that they've been holding on several attempts down. So as of right now, 100K is the brick wall. I smell very bullish activity due to vigorous solar activity. Yeah. 6-second YouTube delay today. That's not bad. That's pretty good. It's hard to get much less than that. All right. So we are in a sell here. Let me see if we're in a sell cycle. We're in a squeeze, actually. So a squeeze is building. They have moved into a sell cycle in both charts, so we could be looking for a buy. To be honest with you, given that we're at this resistance zone, I'd be looking for them to move down and test the first pre-market low or the morning pre-market low. You have an evening pre-market low as well. So we are in a sell. We'll see if they break the squeeze here moving forward, but we would be looking for a buy out of the gate, just so everybody's aware. A lot of times we can get that buy signal really, really quickly. So especially when we're coming in a sell cycle and it's in a squeeze, you can see that buy come up and test the pre-market high pretty quick. So have your finger on the trigger. Right now I'm looking at 685 as my strike. And then we'll see what we get from there. The big key today, ADD is likely to open green. You're going to want to watch that. If it starts to plummet, then I'd be watching for reversals very strongly. And then, other supporting evidence as well, like the transport's turning red, the bank's turning red, the RTY turning red, things like that. Those are all things you want to watch for when you're trading this market. All right, 1 minute and 40 seconds to the open. Again, we're going to be on a buy to start the day. Now, that doesn't mean, to be clear, we are looking for a buy signal. We're not just buying the market when the market opens. That's not what we do. We need a buy signal. We see that, and we will put in a call at that time. But that's what we're looking for, is a buy signal. So I want to clarify, we're not just openly buying the market at the start of the day. Again, I'm sitting on a 685 strike. It's a call strike, waiting for that buy signal. If I get the buy signal, then I will trade. If not, I will let the market play out until I get a signal. I'd much rather they test the pre-market low before we get this buy signal, but I don't get to make the rules. And sometimes they're ready for the breakout right now. So we'll just trust the indicator, because that's what made us all this money, and do whatever it tells us. All right, last minute here, they're pushing down as I expected, coming off this call resistance zone. I figured they would push down off of it to start the day, kind of set a low, and then we'll see if the bears follow through, or if they set that low and the bulls are ready to spring towards 7,000. All right, happy trading, guys. The ADD has opened at positive 400. It's climbing a little right now, but it's much too early to tell. We've only been open for 30 seconds. So trading tip, the market very often reflects the pre-market trading. So they came up here and sold, similar to this, but this is all pre-market. They bought from down here. So coming back down to the 684 zone and buying would not be shocking whatsoever. Options prices are pretty normal. They're slightly elevated, which tells you there's going to be some bear movement, but not a lot. Not a lot of elevation. That doesn't mean there can't be bear movement, but when prices are elevated, that tends to tell you there's going to be a sell at some point in that day, whether it's late or early, to be determined. But options pricing is a great clue as to what the market's going to do in a given day. However, they do get it wrong sometimes. There are times that options prices have been $1 and those options were worth $8 at the end of the day. So just keep in mind that elevated options prices is a big clue. Low options prices is not that much of a clue in any direction. All right, they're pushing off that call resistance pretty darn well. There was also big resistance on the NASDAQ. I told you we were in that resistance box, so this all makes sense. Not very shocking so far to see this move down. They have concluded, or they're as long as they close this bar down here somewhere, they're gonna the squeeze should be played out as far as building. It's no longer building. It can still follow through and go further, but it's no longer building the squeeze. The squeeze is happening as we speak. Matt Hope, welcome to the stream. Happy Veterans Day, Matt. He's a West Point grad, high school friend of mine. I know Veterans Day isn't today. I'm just telling you, happy Veterans Day. Markets were closed yesterday, so there was a lot of quote unquote what I would call free movement for the bulls. Not markets, bonds market was closed, stock market was open because it was Veterans Day, and on holidays the bulls almost always have free reign to float price higher, and that's what we saw yesterday. I told you we got 30 seconds. I told you I was going to show you yesterday. So we started with a trend day down yesterday. We got this sell signal that was pretty good. And then they held down here, and then we got a buy signal that was really good and another buy signal that was really good. Now, we didn't take these because I practice trend day trading, and you're going to miss moves sometimes. That's part of the market. But the indicator was spot on yesterday with all of that. If you're not missing moves, then you're trading too much, because to catch every move, you have to trade everything, and you're going to lose a lot in there. All right, we're looking for that buy signal. We have 685. Let's see if we get one here. They tag the pre-market low, or the upper quote-unquote pre-market low. NASDAQ's bounce is not as good as the SPY bounce here. It's basically a doji right now. JG, how many folks are in the Discord? The YouTube is at 11.5K subscribers. That's great. Thank you, Jack. There's about 600 in Discord. About 300 have the indicator, I think. And then, yeah, like you said, it's 11.5 on the YouTubes. And thank you. Speaking of that, if you're not part of the YouTube community, go ahead and hit that subscribe button. I put out weekly videos, or semi-daily videos, 2 or 3 a week on the market. We do live trading every week. I put out shorts with information on things like Bitcoin and other stuff, kind of help you guys out. So if you're not part of the community, we'd love to have you. Check out the Discord stuff. Check out investwithjacob.com. And, of course, the indicator as well. If you want to get the indicator, there's a link in the description. It's if you go to investwithjacob.com and then go to membership plans, it'll be on that page. It's 30-day money-back guarantee, and you're getting a huge discount if you get it today, 30% off your first month. Or if you get the yearly, you get both Elliott Wave courses for free. Don't forget to like this video. Since we got nothing going on, I'll go ahead and promote real quick. Hit that like button, share it, comment. All of that stuff helps a lot. I appreciate it. All right. Bulls hit the low here. They're trying. The thing is, the NASDAQ's not participating in this bounce. So since it's not, I'm going to flip over there so you can see real quick, because we should not be getting a buy signal here yet. You can see the NASDAQ big time move down and red. And that's going to be a red flag for the ES. And when the markets are not moving in conjunction, so that's another thing about the indicator. It looks at the NASDAQ, the ES, and the SPY all at the same time. And if they're not moving in the same direction at the same time with the same kind of force, and it's not seeing confluence across the three markets, it's not going to give you a buy or sell, because that means that there's not broad-based buying or selling. It means that one market's doing one thing, another market's doing another, and we don't know who's really telling the truth. So right now, NASDAQ is lagging. ES is pumping pretty hard. They have not quite an engulf candle, but for the body portion of the candle, they have an engulf going on. Whereas, the NASDAQ is barely green at all. So anytime you have conflicting data, that usually means a choppy period in the market. Right now, the ES and SPY are kind of on a buy, but the NASDAQ is not anywhere close to a buy. So usually that means choppy market where, you'll get this move up on the ES, then it'll come back down, then it'll come back up and down, and then they'll pick a direction and go. It also means it can be hard to get a trade because in the next 2 bars, the NASDAQ has to catch up and get on a buy, and that doesn't happen sometimes. So what happens is you're on a buy on the ES, and they chop for a minute like this while the NASDAQ kind of catches up, and then you go, well, this is too late because it has to happen within a certain amount of time because time matters. And so if it's not within a certain amount of time, and the time is 3 bars, you will not get a buy signal for that reason as well. You can't have a 100% indicator because you would have a failing indicator, meaning you can't catch 100% of the trades. There's just going to be times the market's doing things that aren't normal. For instance, right now you have a big green ES bar and you have a red NASDAQ bar, and that's not the normal situation for those 2 stocks or those 2 indexes. They normally trade basically in step, meaning if one's going up, the other's going up. They can be different percentages of up, but they're usually going in the same direction. And when they're not, that's not normal. So we don't want to trade not normal. We want to trade the normal. We want to trade the statistically probable. We want to trade what we know is likely to happen, not what we guess is likely to happen. Like I said, likely to be very choppy. That's what we have here. You got a down and up, and now you're getting another down because the markets are not in sync. And until they sync up, you're going to see this kind of weird market behavior. Discord link, you get it when you sign up, Matt. If you sign up for the monthly room, you get the Discord link there. The Discord room is the paid room. It does look like NASDAQ's trying to break down here. I want to see what their pre-market low is and where they're at because we're not getting a trade right now, I can tell you. Let's see. They're not at their pre-market low yet. Okay, so you'll see this sometimes where the NASDAQ pre-market low is much lower, so the ES gets to its pre-market low and then bounces strongly while the NASDAQ hovers, and then they both move down so that the ES doesn't break its pre-market low, but the NASDAQ can hit its pre-market low, and then they, both go up at the same time. So if the NASDAQ hits this 25,630 area, which is going to be pretty good support, and we see a bounce on both charts, we could get a buy at that time. That would be a pretty good level to buy off of, assuming we get a buy signal. And we're always looking for the best areas to buy off of. I'm curious if the Qs broke their upper pre-market low. Looks like they did. I'm guessing this is it. Oh, nope, it was down here, and yes, they did. Okay. So the Qs are below their upper pre-market low, but remember that only takes into account the yellow portion of the pre-market because this is quote unquote post market, even though it's all just overnight trading to me. So the actual pre-market low is down here at 621.06 on the NASDAQ, but they have broken the upper support region, which was back testing this area here. Right now, the ADD has gone from positive 400 to positive 839. That's very bullish. The Volt is also bullish. So, one of two things is happening here. Either they're getting ready to build up for a nice bear or bull move higher, or the bears are strong enough to overcome market breadth and Volt, which tells you that. It's funny. I just looked over to the right. I was looking to so on my left computer screen, I have my Thinkorswim trading platform and stuff, and I was looking at that. And then obviously on the right side of our screen, you can see the Mag 7 is up, and I was going to say the Mag 7's probably red, and they are red. Remember, they were all green to open the market, and they all turned red, but you can see everything else is kind of green. So the Mag 7 is really the driver of the market. Breadth can do so much, but without the Mag 7 on board, you are likely to see either chop or whatever the Mag 7 is doing. So if the Mag 7 is down, the market is likely to be choppy or down. If the Mag 7 is up, the market is likely to be choppy or up. It's really hard to take the market in the opposite direction of the Mag 7 if they're all in conjunction, and they basically are today. Okay, we're looking for a buy signal here. We have good breadth. I think that this will be an okay buy, honestly. Still sitting on 685. We'll see if we get any kind of trigger off of these pre-market lows. Good morning, Jacob. Thanks for trading with us. Do you ever use Ghost Wicks in counts? If they've printed on the screen, if they're in the after hours, generally no. If they're, they printed on the screen but price never got there, generally no. If they are regular trading hours, which you don't generally get them in regular trading hours unless you get like a flash that you just don't even see. I've seen on like Fed days before or CPI days where you see a giant wick, but you never really saw the bar. Then you kind of have to count them, but they do make things a little more annoying. Okay, there's the break of the upper pre-market low on the ES. Strong breakdown here against breadth and against the Volt, which are both positive. If you want this to continue to the downside, if you're looking for strong selling here, then you want to see the ADD turn down. That would give the market the strength to break through just a gap fill. So right now, the likely target is the gap fill at 682.87. And then the actual pre-market low would be the next target at 682.46. If the bears are going to try to break down, they need to get below this 682.46 with some force, and then see what happens from there. But they need to get through the gap close first, test the low, and then see what happens. Qs are pushing pretty hard. Where are they at in relation to their pre-market low? They are below it. So the Qs have broken down below their pre-market low, So now what you would look for on the Qs, if you're a Qs trader, this is actually the NASDAQ, not the Qs per se, same type of deal, is a back test of one of these and then continuation. And that would be a trend day down, and you would not want to trade the buy signals. So keep that in mind. The ES, or the SPY rather, has broken its upper pre-market low, but we know that the actual pre-market low and gap close are down here, so they still got to break through that. But this is starting to look aggressive from the bears, especially if you just look at the Mag 7. If you ignore the rest of the charts, NVIDIA is now down 0.5%, 1% on Meta, 1/3%, 0.5%, 0.5%. I mean, they're fairly solidly red. What are the banks doing? Yeah, see, the banks aren't involved there. The banks and the transports are crushing, which tells you that the bulls are still alive here. That this pullback, whether that's red today or not, is likely to get bought either later today or tomorrow or the next day. You have CPI tomorrow morning, so this can be a dive into CPI and then a push to 7,000. I think that would be a pretty reasonable trade or reasonable move for the market. Remember, guys, we're in an AI bubble, among other things. If you're in my room, you know what other things are. But the banks are going to be the key to this bubble. The banks will be the front-running indicator, in my opinion. Are the Feds releasing numbers tomorrow? I thought they, maybe I'm mistaken, but I thought they reopened the government. Am I wrong about that, or are they still voting on it? I can tell you I watch politics less than 10 minutes a day. But I thought I saw something that Congress is still debating. Well, I did see that they wanted to fire Schumer since he caved. So maybe the Dems backed out of their deal or something. I don't know. I have no idea. I'm speaking out of my butt, honestly. So anything I say here, ignore. I think they're all a bunch of idiots. Another no numbers week. They had CPI last week, I thought, though. I thought they allowed CPI to come out because the Fed needed to know how to handle if they're going to do cost rate cuts or whatever. Maybe not. All right, here's the bounce. We'll see if we get a buy signal now. We're going to move down to a 684 call, though, by the way. Options prices, the premiums are increasing, which tells you volatility is picking up, which is pretty clear on the chart that we're seeing a little bit of extra volatility here. So just be aware of that. They haven't closed the gap yet, so that is a little concerning. When they get this close to a gap close, they like to give a little pop-up, trap some bulls, and then come down and close it. So I'd like to see them touch the yesterday's close before we get a buy signal. That would be better for me. But sometimes it's a trap in the other way where everybody's waiting to get long down here, and then they rip it from just above the close. I mean, it's all a big game, which is why I have an indicator that calculates all that crap for me. House has to vote before the president. House was asked to come in today. Oh, there you go. Thanks, Paul, and welcome to the stream. Siva, thanks, welcome to the stream. I saw a reel a guy did, and I don't care which side you care about. I don't care about either, really. I care about what's best for me and my family and normal people and stuff. But anyway, I think they're all basically idiots. But his reel I thought was amazing. It was 5 steps to cure the problems of Congress. I forget, maybe 6. I'll see if I can remember them all. One was obviously term limits. To have Chuck Schumer and all these guys and the guy from Kentucky, Mitch McConnell, all these guys in there for 40 years or 50 years or 60 years is ridiculous. You get no new ideas, no new compromise, no new anything. So term limits was this first idea, which everybody knows that one. That's no big deal. The second one is that each Congress, I love this one, each Congressperson should make the median salary of their state so that they understand what it's like to live like an average person in their state. and that they can really truly fight to help those people. And then the next one was one bill, one topic. So if you're introducing a bill about veterans, we're not going to tag on, something about rights for somebody else or something about gambling or something else. Just one bill, one topic, vote on it if it's good or bad. I really like that one. Next one was the state representatives don't need to go to Washington or overseas for basically anything. We have Zoom now and we have secure links that we can just do all that stuff. We're spending a ton of money flying these people in and out of Washington all the time. Thought that was a pretty good idea. And the last one, which I really liked, is every single congressperson is assumed to be under oath every time they speak on camera and can be charged with perjury should they break that oath. I think that would cure a lot of problems. I thought it was a really good idea, but that's just me. We don't do politics on the channel. I know I just did, but I thought that was kind of a pretty tame political thing that should be, I would hope, universally like, oh, wow, that's pretty good. Maybe not. Maybe I'm wrong. If I am, sorry. I won't talk any more politics. Unable to run for re-election if there's a deficit. I like that. That's pretty good. Overpaid clowns is the most accurate statement. They're all. I mean, I've never heard more lying and deceit and cheating from every single person in Congress and all. I mean, it's disgusting. I guess that's what happens when you don't get trades. You delve off into political topics. Oops. No more. No more politics. All right, pushing for the gap close. They did give kind of the fake out. Let's see if they get the fake out gap close or if they're going past that. They should tag the gap close regardless, even if they give another fake out or two here, or chop a little bit and then spike it down and go. Quite often they can give you something like this and then spike the gap close and go. So right now they back tested into yesterday's high. They're just above the gap close. Right now they're failing this back test into yesterday's high. If you were on my closing call yesterday, I said that they blew through some support that they probably needed to go back test today. So we should probably see some down today. That looks like what they're trying to do now. So if we just squeeze this a little bit. Yesterday they blew through this triple top right here. So this 682 level, which I think happens to also be around the 1-day minimum. I could be wrong about that. The 682 level should have provided some resistance here, and they just blew through it. And when they do that, that tells you that they're probably going to come back to this. So they squeezed it up, and now they're coming back down to test that area or give you the resistance that you should have had there in the first place. So this becomes an elaborate trap where they take it up through like they did and then come back down, and all of the bulls who bought late get trapped, and they go through. That's support zone. Whatever happened to voting for what's best for the country? I don't know if we've done that in 40 years. I think the biggest problem is whatever you vote for, they go in and do the opposite. Not necessarily the opposite, but they do things that you didn't vote for. A lot of things you didn't vote for and don't want, you know, and then fail to deliver on the ones you did vote for. They say a whole bunch of things that sound nice, and then they throw all those things away and go do what they were going to do anyway. It's kind of like the stock market. The stock market's going to do what it's going to do no matter what the news is. So they're going to let you believe the news and make whatever trade you want to trade against the news. And then the stock market's still going to do whatever the heck it wants to do. Politics is the same thing. They come out and make a whole bunch of promises and tell you what they're going to do, and then they go in there and don't do any of them. All right. Nobody's on a buy signal yet. NASDAQ's still struggling a little bit. QQQ looks like we had 5 waves up. Is it possible we're getting wave 2 to correct this week's moves? It is possible. I don't break down the Qs very often. I haven't looked at them in a long time because I do the NASDAQ instead. But most of the charts are in diagonals. So if you got 5 up, that's likely a C wave. But I'd have to look at it. I don't know, honestly. But if it is 5 up, then you should be getting a wave 2 or 4 after that. $6,900. I guess they like ground numbers to turn around. They do like round numbers. That's accurate. Round numbers are a big deal. Psychological. People say, "Oh, 7,000 can't go higher than that." So then they sell there, and you get a little pullback, and then they go through it, and they're like, "Oh, let's go to 8,000." Here's a back test of the 8. That is your momentum indicator line. So the 8 EMA tells you that momentum is strong. If it gets to it and fails, so far it is failing the 8. Not in a big time way, but it's rejecting it for sure. But if they close this candle above the 8, then that starts to show a little bit of weakness. Again, the 21 is your trend, and they can come all the way up to that and still have a downtrend in effect on the charts. Now they're rejecting this pretty strongly. Shouldn't say pretty strongly, it's 25 cents, but they're rejecting it. We have the parameters for a trend day. Not necessarily. It gets a little tricky sometimes with the pre-market low here and the pre-market high. You got to make sure that the pre-market low is the true pre-market low. This black line down here I drew is the true pre-market low, because this one only takes the yellow portion, which is the quote unquote pre-market. So we would have to break this line to be in a true trend day. But as of right now, as long as they can hold all the way up to the 21 and turn down again, you have the makings of a trend day for the upper pre-market low. But it gets a little it's a little bit tricky there. A true trend day, you need to break this pre-market low and then do that. This is more of a warning because it's just the early stages of the day, or the basically from midnight or 1 o'clock until the open. Basically, the NASDAQ is keeping us from trading currently. If it can get on board with this bull move, we'll look up. Otherwise, we're kind of stuck. High 68.80 ES still an important level, but it's time to drag back down below it. Yeah, 68.80 to 90 is an important level. They've basically been stuck in there all night or overnight. They got a little bit above it, but that area is in fact important. So this is why it's important to have the NASDAQ on board. These big volatility moves. When the NASDAQ's not coming with you, you're getting rejected and turned down. Now there's a gap here that they're definitely, that they generally fill. So be careful on shorts now. Well, we're not going to get a short signal, but be careful if you're trying to short, because they will fill this gap most likely. And welcome to the stream, Mihai. George T. Fun fact: solar cycles are one of the most correlated events with financial markets. Currently, there are 3 separate corona mass ejections due to hit the Earth sometime today. I have no idea what you just said, George, but I agree. I'm going to believe that you're telling the truth. Sometimes when on the beach, I have mass coronals with lime. Or maybe mucho coronals with lime. All right, we got a buy signal here at 129 at 684. Our stop is going to be 683.40. So we are in a call right now. Let me get this all updated in my room. All right. So at 129, that's essentially 130. So at 143, we will move our stop up 25 cents to 683.65. Four-hour candle just started. That affects price too. For me, it does. Yeah, it can. Welcome to the stream, Wellness. Welcome to the stream, Kane. Jacob, do you have a record available to show all the entries with the signal for the past couple months? Yeah, I do. Give me a second and I'll pull it up. We're in a trade right now, so it's a little tougher, Kane. I actually have the last 2 years. I'll show you all the results. But we got to get out of the trade first. Hopefully as a winner. All right, moving up here. Let's see if we can get through VWAP. VWAP's going to be the key. It gets through that. It should backtest the 21, which should make us a winner. If it does not get through VWAP, we're going to get punched. My option's at 129. 684 at 129 with a stop of 683.40. Getting rejection here. So far, they have saved this by 1 penny. We'll see if that holds. That would be funny if it did. I'm guessing it's not going to, but we'll see. I've had lots of trades get to that 1 penny mark and then reverse. Ah, there it went. Okay, we got stopped out there for 110. I'll update that in just 1 second here. Well, there's a new low. Here comes the gap fill. So here is the trap, right? We got drilled on it. They came down like they were going to close the gap, gave you the bull look, and now they're going to come close the gap at least. The ADD is turning down sharply right now. It went from over 900 and now it's at 775, so it's down about 150 really quick. So we'll see what happens at the gap fill. If we get another buy there, we'll definitely take it. But that one did not work out. We got rejected at VWAP. Okay, let me go here real quick. All right, Kane, I owe you the trades. Give me 1 second on that. Sorry, guys, I have to get everybody updated on what's going on and then get my trade re-entered and ready to go. So if we do get a buy, I'm ready. I got that going now. And still haven't fully closed the gap by 6 cents. That's super annoying. That stays. Hopefully they close that before we get another buy signal. And then my computer's a little bit slow right now, but I'm working on that, Kane. Give me 1 sec. Kane. Finally got you set up here. The only way I can do it because of how the YouTube shared screen work is to paste it in. So I'm going to paste it in here and then I'll expand it so you can see it here. I have each trade chronicled too, but that's a lot of data to put on here. So what we're looking at is last year and this year. So this is 2024 on the left, 2025 on the right. Note, because of our success, we did switch to 50 contracts in September. And then this is a really good trading exercise, guys. We had a losing month in March of 2024. We had a losing month in bad losing month in November, our worst one, in November 2024 and December. And we still made $35,000. This is based on a 100K account trading 25 contracts per account. So over the year, we made 35% on our money, 35.5%. This year, we are at 56.8% on our money. And overall, this is almost, $91,000 on a 100K account. So in less than 2 years, we're double our money on day trading. We had a losing month in May and a bad month in August and a just negligible month in September. But this is trading, okay? And this is what's important to realize about trading. It's not about one day. It's not about one trade. It's not about 1 month or even 2 months. And 2 times here, November, December, that was a bad 2-month stretch. August, September here, not a great 2-month stretch. It's going to happen. You're going to lose. You're going to have losing months. There are times that for months at a time, the market does different than what the statistics will tell you. This is why sizing is important. This is why trading risk reward is important. This is why profit taking at the right places is important. This is why understanding trading is important. Our results speak for themselves. I can give you testimonial after testimonial of traders who have quit their jobs. I had a trader who his wife got pregnant. She took maternity leave and never went back to work because he was making so much day trading. I have a guy who pays all of his monthly bills through the indicator. If you just follow our simple process that we tell you how to do, you will make money. It's not a get-rich-today scheme. It's not a get-rich-quick scheme. It's not a scheme, period. It is an edge. And there's a difference between an edge and a lucky trade. An edge is, in the law of large numbers, will win over time. So if you flip a coin, the statistical analysis of that is 50-50. Heads, tails. Those are your 2 choices. Now, you know as well as I do, if we flip a coin 10 times, the chances of it being 5 and 5, not great. I mean, it certainly happens a fair amount, but it's not what you would, it's not every time. But if you flip a coin 2 million times, then you're going to be like 49.8% and 51.2%. It's the law of large numbers. Statistics win over time. And that's just the way it is. You can't have a perfect trading system. Nobody does. You're going to have wins and losses. And that's the mindset and the mentality that crushes people. They can't understand that they lose. They can't understand that losing is part of trading. And when they start to lose, they unravel. Or when they start to win, they unravel. They either get too high when they win and go all in and make a big trade, and that's the time it loses. Or they get they get emotionally distraught when they lose and go all in to try to get it all back, and the losing streak continues. If you just follow the rules, take your mind completely out of the game, and follow the edge, you will make money. That's just it. That is it. That is the big secret of trading. Everybody out there who has a system, I would bet you probably 60 to 80% of those systems work if you follow the rules to a T. I would bet most people don't, and that's why they say it's a scam or this guy cheated me or blah, blah, blah. None of that matters. What matters is you have an edge, you apply the edge relentlessly, you follow the rules, and you will see results. It's just like if you're on the keto diet and you say, oh, well, this is just one candy bar on a Wednesday. Well, that completely resets your ketosis system, and you have to start all over, and you lose days and days because of one candy bar. One bad trade can unravel you. You have to follow the rules. That's it. You follow the rules on weight loss programs, you lose weight. You follow the rules on trading programs, you make money, at least the right ones. So that's the results. I left them up there for a little while so you could kind of digest them. Let me know if you have questions. You can screenshot that if you need to, but I'm getting ready to take it down. It'll be on the video so you can go back and get it. I'm just waiting for my lovely computer to catch up. Reese, can you hear me? I took a minute to get this. I had to get this set up and put on the screen, so I was doing some cleanup on it to get it so I could present it to the group here. And all of those trades are 100% verified. Actually, Matt, I don't know if he's on the live stream today. He's is sometimes, but Matt is a paid subscriber. Matt, if you're on, if you want, not Matt Hope. Matt, if you're on and you want to comment about what you do and why, I would love that. But Matt is a paid subscriber who keeps a trade log of all of our trades as well that we do as a group. And his numbers, we always audit at the end of the month to make sure I didn't make a mistake or he didn't make a mistake. And because sometimes that happens, you know, you fat finger something or whatever. And, you know, he is the one who verifies my numbers, and he's a paid subscriber. He doesn't work for me. He has no reason to give any numbers that aren't normal or aren't what we do. So I know he works, so live streams are tougher for him. But if you're on, Matt, comment away. Okay, we got a buy here. We're going to take 684. We got, what did we get here? 105. And our stop is going to be 682.90. 682.90. So 105, 682.90, guys. 105, 682.90, just so you're ready. And Kane, there's a 30-day money-back guarantee on both. What I tell people is if you're on the fence, try it out. Try it for the month. You get 30 days, but you don't even have to trade with it. What you can do is paper trade it, or just put it on your chart and watch it for a month and see how it does. And if it doesn't do well and you don't like it, then so be it. If it does well and you love it, keep it. It's really simple. That way you can see for yourself what it does and not have to rely on what I say. Today it's kind of kicking me in the butt, though. This loser here, and this one's looking a little suspect. Come on, Bulls. Let's round it up a little here. And if you get it today, you get 30% off your first month, which is pretty nice. So you can, if you do keep it, you get the first month at a discount. Most people keep it, I will say that. I wouldn't be in business if everybody returned it. Got to get through the 8. That's our momentum indicator. It's got to get back through this red line. If it gets through that, we should get back to VWAP, which would produce a winner. Otherwise, they are going to test the true overnight low down here at 682.50, basically 48. And then we may have ourselves a little trend day. Well, that got us 88 cents on that one. We got stopped there. Oh for 2 today, and we're starting to get into trend day possibilities. So we got one more shot at this, and one sec. Okay, we got one more shot at this, and we'll see how it goes. But right now has not been our best day. That's how it goes, though. That's how trading is. Some days are your best days, and you capitalize, and some days aren't, and you limit your losses. A lot of people here would be like, well, it's going to come down to here and then bounce, so I'll just stay in and buy more down here. That is a losing formula, guys. Don't do it. Don't do it. Because what happens is it comes down here and it does this, and you buy more, and then it does this, and you're like, oh, it's going to come down to the next one, we'll buy more, and then we'll buy more, and then by the end of the day, you're out of money. So we take it when it says to take it. We shut it down when it says to shut it down. That's it. Follow the rules. Sonny Paul, JG, thanks for setting up these live sessions. Considering the huge drop in VWAP, do you think the market would be able to push significantly higher by end of day? I mean, I don't know if it's a significant drop in VWAP. Are you talking about on the screen here, this VWAP? I mean, it's moving down with price, which is a good thing if you're a bear. I'll be honest about that. And the ADD is falling off a cliff. It got up to 900 and change, and now it's down to 427, so that's a red flag for the bulls. But they still haven't broken the pre-market low, and this is going to be the area that matters. This is, I mean, anywhere in here, but this zone right here is what's going to be what matters. They filled the gap, so everybody's looking for the gap close, which is why you got this quick spring back into the 8 that failed. So that's a key level to trade off of. It failed. It happens. And then the next key level is going to be the true pre-market low right here that I have, and they'll look to spring off of that. If they can't get off of that and they break down below that, then I would say the bulls' chances of a significant move higher is probably low for the day. The ADD is now against the bulls. The chart is against the bulls, breaking the pre-market low and stuff. So for the day, the bears are in control right now. And if they get below this pre-market low with some force, then you could see the trend day down and most likely a down scenario. Right now, it's showing perfect trend day personality. So what a trend day does is it moves down below the moving averages, back tests them, moves down below the moving averages, back tests them, moves down below the moving averages, back tests them, moves down below the moving averages, and it back tested them here actually, and continues on that path. That's why these lines are so important. They tell you where the trend is, and when you get into it, it can reverse pretty quickly. Once you get above the 8, you can build momentum pretty quickly. All right, they're breaking into and below the pre-market low here, so that may put us into trend day parameters. We'll see how it reacts off of this level. This will be our last bullet if we get one. If we don't get one, then so be it. That will be the end of our day trading for today. The reason we have a 3 strikes and you're out rule is it's so easy to continue to chase and continue to make bad decisions. And when you lose in succession like that, it really messes up your mind if you don't know how to handle it. And so if you just walk away from the computer, you can't trade. And that's what the whole idea behind that is. You're going to miss moves. You're going to get 1 strike, 2 strikes, 3 strikes, and then they're going to do this on a buy signal, and you're going to be like, oh my God, that was the one. Then the one will be there tomorrow or the next day or the next day. There always are trades the next day, and when you're not mentally able to handle it, you need to step away from the computer. This is a pretty good move by the bears, by the way. Good volume on this breakdown bar right here. Not great, but good. And good follow through here. Our next support level, kind of off a cliff now, guys. It's all the way down here at 680. And technically it's going to be 680.79 is your next. No, let me move that up. 681.33 is your next support level. Then you got 680.81. And they've broken yesterday's low. That's a great sign for the bears. But like I said yesterday in the closing call, it was likely they were coming back to test this zone right here, and they just did it. So this was the zone I said they walked right through without a problem, right? This right here is a big deal. You have 1, 2, 3, 4 tests of this area, and when they came back up, they didn't even pause. They just went right through it. That tells you that they're setting a trap. So that's something to keep an eye on when you're trading, is resistance zones. If they would have just done this, come up here and just done this, then I would have said this has been satisfied. We're good to go here to the upside, but they didn't. And yesterday on my closing call, I said this area is going to be important for the bulls or bears today, and we should see some downside back into this zone before we see more upside. So we'll see how this goes. They're right off of the zone, they are bouncing, and that is what we see. So again, one more bullet we can fire. They have not fully initiated a trend day yet because while they have broken the pre-market low, there are still two more requirements: a back test and a lower low. If they do that, then we're in a trend day. I'm going to switch to Meta real quick because it's been pushing away from its 200-day moving average. Holy cow, Meta. That is nasty. I'm going to zoom out for this one. Sorry, guys. Give me 1 minute. I just want to see where we're at on that because this is an epic short. So on the daily, oh, I don't have the 200 on here. On the daily, they're in big time momentum down. You can see the 21 has just plummeted. So is the 8. They're staying below the 8. They can't get back above it. I'm going to switch charts here for 1 second. Back to, I'm going to go over to the, I can't now. They might get a buy signal, and we'll take our last shot here. I'm moving my strike down to 683, just so you're aware. I'm sorry. Yeah, to 683. I said that right. My bad. And we just got the buy signal there. So we got 118 at 683. And our stop is going to be 682.10. And this is our last bullet of the day. So it either happens now or it doesn't. Okay, so we're in at 118. So that's essentially 12 cents. So 130, we're going to move our stop up. Okay, we're going to move our stop up to 682.35. And if they can get to 136, we would move our stop to break even. They got to get to 136, though. They got to 133, pretty close. But so far, they're rejecting the 8. So if they reject this 8 and make a new low, it's a trend day anyway, and we're out the door. Everything with the indicator is designed to hopefully help you guys with the mental aspect of trading, because that is the key. It's not about the system, it's about the mental aspect of trading and understanding that when things aren't going well, it's not a day to trade, or when the market's not giving you a setup or a look to trade. There's a lot of days that are choppy and you just need to walk away and do something else. There are trend days where you just need to walk away and do something else. And the whole design of the indicator is to keep you in the right place at the right time when you're trading. All right, Bulls, moment of truth. You got to get through that 8. If you get through that, we're likely back up into that VWAP zone, and that'll be a winner. So let's see where we're at. We're at 131. We need 136 here to get to break even. Very close. If they can truly tag the 8, that would get us there, I think. And then 142 would be our 20% take if we can get it. Man, we missed by 2 cents moving our stop to break even here. Let's hopefully they hold and get back up there. It's so annoying when they do that. Come on, buddy, just a little higher. For the trend day, is it really the overnight low or the pre-market low? It's the overnight low. You want the full low experience because uh, the range is the overnight range. That's what you're trading essentially is the overnight range, and so you want to make sure you understand where the true low is. Now, it's a warning when they break the upper pre-market low that they are likely to come down to the overnight low at that point, and then we'll see what happens there. But the big difference between the two is one is a warning and one is the actual trend day parameter hit. They had good volume on that bottoming candle, and it's a hammer, which tells you the bulls are trying to buy that zone. But if the bears come back with stronger volume, I guess it doesn't matter. But the hammer candle that they just built on the prior 5-minute candle there that you see with the wick way down, that's pretty decent volume. I mean, it rivaled the volume of the candle before it. It's above the average volume. So we'll see if they can follow through a little bit, maybe back to VWAP and down, since VWAP and 21 are going to be a very big sticking point here. All right, coming back to the 8 here, and the 8's flattening is good. We should be able to see them try to just poke over it. They just did. Okay, there's 136, so we're going to move our stops to break even now. And then we'll see what happens from here, but we're not going to lose this trade. So that's the key, right? This is how you limit losses. If they turn down, spike us out, and go back up, okay. But most of the time they don't. They turn down and they follow through, and the trend continues. So now we've made it where it's emotionless. We're risk-free. We can just chill and see what happens and hope the bulls try to ride this up and we can make some money. Otherwise, we go home, break even on this trade, and a small loser for the day is what it is. That's the way the market works. That's how trading works. You don't always get the perfect setups and wins. Okay, they just stopped us out at break even. So we're going to go ahead and close out, or we already closed out. Actually, it closes out for me. So we're stopped at 118 there. Can they spike this back up and go? Absolutely. But we limit our risk so much by doing this that all we have is upside potential and very limited downside potential, and that's really what we're looking for. Now any low is going to create a trend day to the downside, so keep that in mind. We're going to go ahead and get that stopped out at 118. So for the day, let's see, that's 17 and 9, 36 cents on the day, about $1,500 loss if you're trading 50 contracts like I do. A little more than that, but roughly 1,500. So it's actually an $1,800 loss. Sorry, $1,800 loss. And those are, that's just the way trading goes. You get winning days and losing days. Today was a losing day. The enemy of the indicator, guys, is essentially trends that don't let up. This is a trend that's, not fully a trend day yet, but it's not letting the bulls get anywhere. It's continuing to hold the 8, which is a trend, the momentum indicator. And so when you can't get above that, that's going to be the enemy of the indicator. Those are going to be the days that you get kind of beat up a little bit. But I mean, the reason you trade off of key levels is because more often than not they work, but that's more often than not. The answer isn't every time they work, it's more often than not. So you're going to get some of the knots. You're going to get some of the not working trades. Today we got them. So be it. Overall, from a market standpoint, just kind of a pullback into that zone I talked about yesterday and showed you guys on the screen here, this box. We'll see if they break below that. If they start to break below that, they can get some momentum down to 680, and then we'll see if they're able to truly stack up some points to the downside, or if we are just pulling back a little bit before the next rise to 7,000. So has an NQ achieved this now? As they were part, yeah, probably. I haven't looked at the NQ honestly, but yeah, NQ is in a trend day down. So if you were trading the NQ, you would have been out of trading. But you got to remember, it's each chart on its own. There are lots of times that the NQ starts down. I don't trade. I cover the NQ. I don't trade it. I trade the SPY. So it broke the pre-market low, came back, tested, and made a new low. That's a trend. So we would expect them to continue. But you got to remember, the NQ leads a lot. So if the excuse me, the SPY hasn't confirmed a trend, the NQ can make a low in reverse just like that. But this is a big warning. This is something that you can look at and say, NQ's in a trend day. I'm not going to trade the SPY because it seems like a down day. That's up to your trading preferences. Mine is I trade the chart I'm on, each chart on its own, because all charts can do different things. We saw at the beginning of the day the NASDAQ was sinking while the ES was climbing green. So don't ever think that you have to, or that if one chart's doing something, the other one has to do it. That's what I'm trying. God darn, this cough like comes, but it's not like a cough. It's like it shortens my breath. It's really weird. Don't think that you have to do it. Sorry, don't think that because another chart did it, your chart has to do it too. It does not. Okay. All right, guys. We're going to wrap this up, but I do want to go through the ADD is around 400 positive now, which is where it opened the day, and climbed all the way up to almost 1,000. Now it's back down to 400, so it's falling. The VOLD is a little bit positive. The banks and the transports are positive, so my gut tells me that very unlikely that this is a sustained down move unless the Mag 7 says it is. And what I mean by that is they continue to pound them to the downside and push, because if they do that, then it doesn't matter what the ADD says or anything else. The Mag 7 is the market right now, and they get to make the calls on that. I wanted to go over Meta earlier on this chart. Let's go to the daily. Meta is well below its 200 and has been for a while. And the longer you stay below moving average, the weaker you are in that zone, or in that moving average, because it allows it to turn over. You can see the 21 is fallen off a cliff and crossed the 200. The 50 has crossed the 100. The 100 is completely rolled over, and the 200 is flat and starting to turn. And you can see that since the 29th of October, Meta has not only been under the 200, but well under it. They didn't quite fill this gap here, which is a bullish or bearish sign. When they come down and almost fill a gap and bounce, it usually means they want to go lower. So they have another gap down here and another gap down here. 549 is the next target down on Meta. And if they get below that, 480 is kind of their backbreaker. If they break 480, Meta's top is likely in for a while. And Netflix was the other one I wanted to see today. They're actually green. They've made a little bit of a comeback here. They've been below their 200 for a while. They just got back above it. Looks like today maybe. So yesterday they closed back above it and the 21. That was a strong close by Netflix. This is actually just from a price action standpoint, you could buy this here, looking for at least a gap close back to 1184, which is their next resistance. This can actually turn up pretty strongly, assuming they're going to follow through. What's the volume on the low, though? Where's the low? Low's right here. There's not a ton of volume down at the low, but they are coming off the support zone, 1162. They're just above that. They back tested their last breakout, essentially. Not quite. But close enough that I'll call it good. So they're back testing their last breakout and turning up, and they just closed above the 21 and 200, and now they back tested and hammered off of it so far today. They're one of the few green Mag 7s. So that's an interesting one for me on Netflix as a potential for this to be a wave 4 and then a fifth wave higher towards like 1300 or something. All right. I appreciate everybody joining the stream. Sorry it wasn't a great day today. We've had a lot of great days. Today wasn't one of them. That's how trading goes. We'll be back next Wednesday to do it all again. Thank you guys very much. If you got the indicator, I'll get you access right after the stream. I know a few of you did, so I appreciate it. And we'll see you next week. Thanks, everybody.